Okay, let's just dive right in. For years, if you wanted a window into the mind of Michael Burry, the guy from The Big Short, you had one, his quarterly filings. He was this ultimate public contrarian. And then late in 2025, he just disappeared. He pulled the plug on the whole thing.
He really did. And that vanishing act, it wasn't just him, deleting his Twitter account again. This was a formal legal maneuver, a really big deal.
So the core event we're digging into here is what happened on November 10th, 2025. That's when his firm, Scion Asset Management, officially terminated its registration with the SEC.
Exactly. And for anyone listening who doesn't track these kinds of regulatory filings, let's be clear what that means.
Yeah, break that down.
Scion was managing about $155 million. That's way over a $100 million threshold that makes you a registered investment advisor, an RIA.
And that RIA status is what forces you to file the Form 13F every quarter, right? The form that shows all your stock holdings.
That's the chain, yeah. So by voluntarily deregistering, Burry is basically dissolving the public fund. He's moving to a private family office model. He's not stopping investing, he's just stopping the public reporting.
And he even gave his own reason for it. In a letter on October 27th, he was super blunt. He said his investment view was, and I'm quoting here, not now, and has not been for some time, in sync with the markets.
It sounds almost like he's admitting defeat, doesn't it?
It does. It sounds like a surrender.
But I think the tactical reasoning is way more aggressive than just feeling out of sync. Analysts really believe the core issue was the entire structure of public fund management. He saw it as a rigged game.
A rigged game? How is it rigged against someone like him? I mean, isn't all this disclosure supposed to be a good thing?
Well, it all comes down to the timing. Burry has this public persona, right? He's Cassandra Unchained, the prophet who sees the future, but nobody believes him.
Right.
And he was shouting from the rooftops about what he saw as this massive AI bubble in 2025. But the 13F system forces the prophet, Cassandra, to tell everyone his exact prophecies, his stock positions, every 90 days.
And with a huge delay.
A huge delay. So his big, long-term ideas, which are often, right, but way too early, get exposed to the whole market. It gives his opponents a literal playbook they can use against him.
So they can ridicule him in the short term and even trade against his positions because they know exactly what they are.
You got it. Imagine you have a 3-year thesis to short a stock. You put on the trade, and then 45 days later, the entire world knows. The company knows, the traders know. You just can't run a long-term contrarian strategy when your playbook is published every quarter.
And that idea of him being out of sync, I mean, you can see it so clearly in the data from 2025. His portfolio was just chaotic.
Utter chaos.
We're talking about portfolio turnover rates of 95% in Q3, and it was 100% in the quarters before that. That's not evolution. That's just strategic whiplash.
It was manic. It really was. You look at Q1 of 2025, he goes all in bear, sells every single stock he owned, and plows almost $200 million into put options.
Betting against the market.
Aggressively. His biggest target was NVIDIA, with a nearly $100 million notional short, plus big shorts on Chinese tech like Alibaba and JD.
Okay, so that's a coherent, high-conviction bet. A bubble is coming.
Right, and then what happens 90 days later?
He abandons it completely.
Gone. Every single bit of it. It's like he had this come-to-Jesus moment and decided he was just too early. So in Q2, he does a complete 180.
The bullish pivot.
Totally bullish. All the puts are gone. Now he's buying call options on U.S. companies, healthcare, consumer stuff, United Health, Lululemon, and this is the important one, Regeneron.
And this is what leads to what you call the aha moment, because right after this, earnings season hits.
And the results just pour gasoline on the fire. United Health reports bad results. Okay, that bet was a short-term loser, fine.
But Regeneron
reports spectacular news. They just crushed analyst estimates by over 51%. The stock soared. His bullish thesis was brilliantly validated.
So the logical thing to do is obvious. You cut your loser, United Health, and you let your massive winner, Regeneron, run.
Any rational manager would, but he didn't. When the next 13F came out, it showed he sold 100% of his positions in both of them.
Wait. He sold the massive winner with the same urgency as the loser.
With equal alacrity. That right there is the proof of a complete strategic unraveling. It proved what he said himself. He was so out of sync he couldn't even stick with his own winning ideas.
Which brings us to his final public portfolio,
Yep.
Q3 2025. This is his last stand, his ultimate high-conviction bet before going dark.
And it was a big one, the big AI short. He basically shorted the new economy AI and went long the old economy energy, pharma.
The core of it was these two massive bearish positions.
About 80% of the reported $1.38 billion notional value was in puts against two companies, Palantir and NVIDIA. He was targeting what he called their stratospheric valuations.
But this wasn't just him saying the stock's too expensive, right? He had a whole theory behind it.
Oh, yeah, a really sophisticated one. He called it the circular capex thesis.
Okay, what is that?
He argued the whole AI boom was just a closed loop, an illusion of demand. It works like this. The big cloud companies, like Google or Amazon, buy billions in chips from NVIDIA. Then they use that infrastructure to fund AI startups like Palantir.
And the startups.
Immediately turn around and spend that venture capital money right back on cloud services and more chips from the big guys.
So the money just goes in a circle. It's just NVIDIA, Google, and the startups passing the same dollars back and forth to each other.
Precisely. It creates this illusion of a massive organic boom, but it's really just a self-fueling capital expenditure cycle. Now, this is where we have to clarify that headline number. The media was screaming about $1 billion bet.
Right, the $1.1 billion short. But that wasn't the actual cash he put on the line.
Not even close. It was a tiny fraction of that.
Yeah.
The $1 billion, that was the notional value, the value of the shares the options control. Burry himself clarified he only spent $9.2 million on the Palantir options.
Only $9.2 million. And they were long-term bets too, right?
Very long-term. They were long-dated puts for 2027 with a $50 strike price. This is so important.
So it's not an all-in bet the farm move. It's like buying a cheap lottery ticket that gives him 2 full years for this bubble to pop. Yeah. If he's right, the payoff is gigantic. Yeah. If he's wrong, he only loses the premium.
It's classic asymmetric risk management, a low-cost, high-reward bet. But the mechanics of the 13F filing system turned this very calculated wager into an absolute PR nightmare.
The 45-day delay, this is the final straw.
The final straw. The timing was just a catastrophe. His Q3 13F, disclosing the massive Palantir short, was filed on November 3rd, 2025.
Oh, no.
By the worst possible coincidence, that was the exact same day Palantir reported blowout Q3 earnings. The stock surged to an all-time high of over $200 a share.
So at the exact moment the world find out he's shorting this company, the stock is exploding in his face. Maximum public humiliation.
Brutal. And Palantir's CEO, Alex Karp, saw that public disclosure and used it as a weapon.
I remember seeing that interview on CNBC. It was extraordinary. He attacked Burry by name.
By name. Called the short batshit crazy. But he didn't stop there. He actually escalated it to an accusation of criminal market manipulation.
Which is insane.
Right.
He's legally required to file this form, and the CEO of the company he's targeting uses that mandatory filing as a public relations bomb to attack him personally.
It's the perfect example of why the system was untenable for him. It was weaponized disclosure.
So the termination on November 10th was the only move he had left.
It was the only logical exit. It solved all 3 of his problems from 2025. The out-of-sync volatility, the right but early disclosure trap of the 13F, and the direct weaponized public attacks.
So to sum it all up, he didn't actually abandon his big AI short thesis. He just privatized it. He took it off the grid.
Exactly. He escaped the short-term pressure. He took the 13F weapon away from his opponents. He kept his 2027 bubble thesis alive, but now it's completely hidden from view. He didn't close the short. He unchained Cassandra and took her underground.
And it really makes you think about the structure of the market itself. I mean, we saw him earlier in the year selling a huge winner just because he was so disoriented. It suggests the whole high-frequency, high-disclosure system we have now might be fundamentally incompatible with patient, long-term, contrarian investing.
Which leaves us with a really important question, I think. If one of the most famous bubble spotters in the world is forced into silence by the rules of the game, what does that mean for everyone else? What does that silence mean for market transparency?
Right. When Cassandra goes quiet, who's left to warn us about the bubbles? And that's a vital reminder for you listening at home to always conduct your own due diligence. Always look at the bigger picture, because sometimes the most important information just disappears from the public record entirely.